Hey there, it's Jerry Smith with Interlink Mortgage. What I wanted to share with you today is really just kind of give you an update of what's going on in the housing market. We're going to talk a little bit about what's going on with interest rates, also what's going on as far as activity in the housing market, how it is changing, and also kind of give you an idea of what to expect in the future in these coming months as we kind of move forward through this. So a couple things. First off, let's talk about interest rates. So last week, the Federal Reserve made an announcement that they were raising the federal funds rate 0.75%. Now, there's usually a big misunderstanding of how that affects interest rates. A lot of the public believes that that has a direct effect on fixed mortgage rates by 0.75%, and that's just not true. That's not how it works. They are not directly correlated to go up in the same amounts. Now, actually, let's kind of talk about what the federal funds rate does. So the Federal Reserve uses that rate to kind of speed up or slow down the economy. Now, so if they raise the rate, they're trying to slow the economy down. If they are decreasing the rate, they're trying to speed it up. Kind of think of it like a gas pedal or a brake, as one of my coworkers used that analogy. So what they're trying to do right now is really slow things down to try to tackle what's going on with this inflation. So that's a good thing. So by them raising it 0.75%, that is actually a sign that they are serious about inflation. If they would have raised it less than that, it would have been seen as more of a passive move and really not showing a seriousness of a move to tackle this inflation. So what we're kind of seeing is the effect as far as on mortgage rates is we're kind of seeing a little bit of a plateau this last week. That's a good thing, okay? Leveling out things, that's better than seeing a lot of volatility, which we have seen over the last couple months. So the more plateau or level activity with mortgage rates, that is a sign of improvement. But one of the things we're going to have to really watch is what the Federal Reserve does in their next couple meetings, because that's really going to dictate what's going to happen with interest rates. Now, let's talk a little bit about what's going on in the housing market right now. Specifically, let's talk about mortgage applications, because that is a direct correlation of whether people are going to be buying homes and so forth. So right now, the purchase applications, when we look at the activity of mortgage applications with purchases, they were up 8% last week from the week prior. However, when you look at it for where they were last year, they're down 10% year over year when you look at it from that week prior. So if you look at it from last year, definitely down a lot. Refinance is completely different with interest rates going up. Obviously, refinances are not going to be as high. They're down 3% from last week, but down 77% from the week prior. So those have pretty much disappeared unless it's like a cash out and someone's taking advantage of equity or something to that degree. Foreclosures are up 185% year over year. Now, when I first heard that number, it really kind of opened my eyes. But when you think about it, it's really returned to what we were seeing before the pandemic. You see, during 2020 and 2021, there were a lot of rules in place that were preventing foreclosures from even happening. So it's kind of an outlier number, but it is something to kind of understand how that number came about. Now, let's talk about what to expect in the future with housing markets. So my opinion, is still a great time to buy. There's data that supports my opinion with that. Number one, rates, when you look at them historically, are still low. Even though they are in the 5s and the 6s, it's still low when you look at it over a 30-year history. Now, one of the terms that we keep seeing or people posting on the internet or talking about is something called marry the house, date the rate. And let's kind of talk about what that means. So if a house exists, it checks all your boxes, you fall in love with it, you can't go back in time and get that house, okay? Interest rates, you can always refinance into a lower rate, but you can't go back and get that same house. So the forecast is basically showing is there will be a time when you can refinance into a lower rate, but this inflation has got to be taken control of before that will take place. But you can't go back in time and get the house. Now, what about values? So the appreciation or values are expected to increase over the next 2 years. Now, we're not expected to see these 15 and 20% increases like we saw in 2021 However, that wasn't sustainable anyways. That's not healthy for the economy for something to take place like that at such a drastic amount. But the single digit appreciation levels or value increases is really good, and that's what we're used to for real estate. So what are we seeing right now? So starting to see open houses. We're starting to see some price reductions. I've even started receiving offers or contracts and hearing about offers that have contingencies on them, sale contingencies. Those are things that we weren't seeing in months prior. So it's a great time to buy, especially if you've been in the market to buy for about 6 or 7 months. This is now might be an optimal time to buy because you can get a hold of a house that maybe you weren't able to purchase in the past. So look, if you've got any questions about this, always feel free to reach out to me. Be glad to guide you with it. If it's not a question that I can answer, I certainly know a lot of people that can answer those questions if it's related to a field that I'm not in. But I'd be love to have a conversation with you about just any of your housing needs. Jerry Smith, 706-594-1306. We'll talk to you soon.